Absolutely. My pleasure. Thanks for hosting, Leah, and the great introduction. And appreciate everybody who's taking the time out of their day to be here with us and who people who have submitted the questions. Looks like some are already coming into the chats. We'll get through, as Leah said, the pre-submitted questions first, which we have several, and then we will address the live chat questions as well. And maybe we can, we'll come back to Paul, I guess, Leah, however you want to handle that. And then, but yeah, type your questions in before you forget them. No such thing as a bad question. If you're thinking about it, the chances are other people are also.
All
Get
right,
started.
we'll get started with our first question. The first question is from Paul: How to use solo 401k funds? And Paul has added in our public chat. We invested 70,000 from our solo 401k into my living trust account with ValChris instead of solo 401k. What do I do with the money I receive when my loan pays off? Can I reinvest it into my solo 401k, or do we need to 1099 forms from the two accounts with ValChris?
Okay. I need to process this. Hold on one second. We invested 70 from our solo into my living trust account with ValChris instead of a solo 401k. Okay. So Paul, are you saying you took money out of your solo 401k inadvertently or by mistake and then put it into another financial trust of some sort? Okay. Instead of a solo, what do I need to do with the money I receive when my loan? Well, did you take it was it processed properly as a distribution, or did you just take money out of the checking account and move it into your own personal account? That's a problem. That's a prohibited transaction if that's what happened. If you took it as a distribution, well, ValChris, okay, so let me back up a little bit. ValChris they're private money lenders. They do hard money loans for everybody listening. So Paul is saying that he invested money with them in one of their trust deed offerings, their private money loans secured by real estate. It was a distribution to ValChris. Well, a distribution, I think we're mixing up terms. A distribution comes from your retirement plan to you personally. An investment with ValChris is an investment with ValChris, whether that's done in your solo 401k or with your personal money. So Paul, we probably need to jump on a call because it sounds like maybe some money was taken out of your solo 401k incorrectly. And so we need to talk through what this looks like, because if a prohibited transaction was done, then we probably need to figure out how to best mitigate that so that you can either avoid or incur less penalties. So the solo 401k penalties that are due if a prohibited transaction has occurred. And so it's a little bit unclear to me whether that's actually happened or not. But I would recommend it sounds like you might have called our office already. So we'll definitely call you back today and talk through this. But yeah, that's the elephant in the room. None of the other questions you have matter if that's what happened. We just read the other questions to make absolute sure. What do I do with the money I receive when my loan pays off? Okay, I mean, it's your personal money now, so whatever you want, if I understand correctly. Can I reinvest it into my solo 401k? No. I mean, technically, you can make a contribution to your solo 401k for, just like a normal contribution, like anybody can do that has a solo 401k, but the money can't just go out of the 401k and then back into the 401k. That doesn't work. And yeah, those 1099s would be applied to your personal situation now if that's your personal money. But yeah, we'll call you after. I don't know what time zone you're in, but we'll call you today after 2 o'clock, hopefully, in whatever time zone you're in. So yeah, thanks for the question. A little bit of complicated stuff to start out with, but Pacific time. Yeah. So we'll call you in a few hours. It's 11 o'clock right now here. So, all right. Next. Thanks, Paul.
Okay. For the next question, we have from Annie. The asset in my solo 401k plan was assigned to a LLC registered with New Mexico in October 2025. Does the LLC require to file tax return with New Mexico State?
Well, Annie, the asset in your solo 401k was assigned to an LLC. Okay. So is this LLC owned by your solo 401k, or is this an LLC that your solo 401k is now like a limited partner in? I don't know. That's not clear in the question. If you're here, type it into the chat. But until then, 401 LLC is required to comply with whatever the state requirements are. So if an LLC is filed in New Mexico, it's required to whatever New Mexico requires each year. Same thing with any other state an LLC it's unclear to me whether you're the one responsible for this or somebody else. But either way, somebody's got to take care of that. And then, so that's a little bit unclear to me. And a solo 401k does not need an LLC to have checkbook control, for example. Sometimes people add an LLC to the mix for limited liability protection, but 9.9 out of 10, there is no LLC associated with a solo 401k by itself. Doesn't mean that you can't take solo 401k funds and invest them into another LLC that's not owned by the solo 401k, right? That's fine. But that's kind of two different conversations here. So I'm unclear on exactly what you mean by this, but yeah, the LLC filing requirements are applicable in any situation per the state that the LLC is filed in. So check with New Mexico if you're responsible for that. Yeah, again, I'm not clear about where this LLC kind of fits in on this. And RMD stands for required minimum distribution. So Annie, that means that you're 73 years old or older, which is possible. Most of our clients have not reached that age, but some have. And so maybe you are talking about required minimum distributions. Either way, the payer's name, if the distribution is coming from the solo 401k, again, the LLC has nothing to do with this because the money's coming from the solo 401k, not from the LLC. The solo 401k is the retirement plan. So any distributions from the 401k, whether required or otherwise, are going to be paid from the name of the solo 401k plan and its tax ID number, its EIN number. And so that's who the payer would be on the 1099. And if you're a client of ours, which I assume you are, but maybe not, then you have access to our client portal, which has very clear instructions on how to complete 1099s in any given situation that applies. So you can check for more information on there.
Aged 61 and 9 months, can I begin a monthly draw from the rent proceeds of a two-family home held in an LLC owned by my solo 401k? If this is allowed, what is the procedure?
Yeah, Joe. Boy, this LLC thing is coming up a couple times here with the solo 401k. Pretty uncommon, but yeah, Joe, you can absolutely take distribution starting at 59 and a half. So you're past that, and so you can take a distribution from your 401k in whatever method or dollar amount, not whatever method, but whatever dollar amount you'd like. If it's going to be rent proceeds or just cash sitting inside of an account somewhere in the name of the 401k, that's fine. It's totally up to you. You can distribute the property to yourself. That's a little more complicated, but it is possible. And just if it's traditional money and not Roth, then talk to your tax advisor about what the tax implications will look like. But sure, you can do that. All right, we have a little bit of white noise coming from you, Leah. So I'm going to repeat the question for everybody involved here. Greg is asking, can a severance package be utilized to start a solo 401k? Well, Greg, probably not. The only money, and let me talk through this a little bit, but when you think of a rollover into a 401k, that must come from a retirement account. So probably that severance package is not qualified money. It's not a retirement account. It's not pre-tax money. It's not after-tax Roth type funds. It's just like a paycheck. So probably not. Now, what you could technically do is if you qualify for a solo 401k, meaning you're self-employed, you have legitimate self-employment activity and no full-time employees besides you and your spouse, then you can make contributions from the business, the adopting business, right? So your self-employment business adopts a solo 401k plan. That's where the contributions come from. You got to show the income to make the contribution. So could you use the severance package as seed money to start your business? Sure. So you could kind of indirectly have it start a solo 401k, but that's not what's starting a solo 401k. It's having legitimate business activity that's allowing you to start a solo 401k and have one. I think you mean fund a solo 401k, and I believe I addressed that question there. So thank you though, Greg, for the question. Sorry, Leah, so let me repeat the question. So Rob is saying, I need to roll over a K plan into my solo 401k. What materials are needed to do this? Okay, Rob. So you say my solo 401k. So I'm going to assume you already have a solo 401k, and I'm going to assume that you have a 401k from a previous employer and it has not been rolled into an IRA. Not that that would be bad necessarily, but you said 401k. So I'm assuming 401k to 401k. So this is a direct rollover, right? From one plan to another, one 401k to another. So what materials are needed to do this? Rob, if you're our client, in our client portal, we have explicit step-by-step instructions on how to do this, but I'll walk through it high level on this call since you asked. essentially you're going to go to the existing 401k provider and you're going to ask them if they have a form that they would like you to fill out requesting the direct rollover to another 401k. If they say yes, use that form. If they say no, then in our client portal, in those same instructions I referenced a minute ago, you will see our rollover letter of instructions and the letter of authorization that you can fill out, which again, we supply you with step-by-step instructions. It's a fillable PDF, so you don't necessarily need to print this out, although it does need your signature, so you can sign it either digitally or if they accept that, or wet signature. Figure that out on with them, but fill it out. It's pretty straightforward. And then they will issue a check from the current 401k provider will issue a check to you made out to your solo 401k plan that you can then deposit into the checking account for the solo 401k. And then that's how you get it into the plan, right? And then you can fill out our contribution form, which is also a fillable PDF for your records as the plan administrator. And then you can let your CPA know that when it comes to tax time, you're going to get a 10 from that solo 401k, from the previous 401k provider, indicating that it was a direct rollover and obviously not a taxable event or penalties of any sort. And then he'll apply that to your tax return accordingly. So it's a pretty straightforward process. You don't have to go through us here at Sense Financial to do that. As the plan administrator, you have the power to do all of that. I would encourage you to follow our instructions on the client portal because they will walk you through step by step. But again, check with the current or former employer plan provider first. If they have a form they want you to use it. If not, then use the one that we provide in our client portal. Good question.
And from our chat, a public chat right now from Siva. I have a solo 401k that was established a few years ago. I have been contributing and investing. This is working great. I also have money in a separate rollover IRA. Can I move a portion of this rollover IRA into my solo 401k? And if yes, is there a limit to the amount that I can transfer?
Okay, yeah. Siva, thanks for the question. And thanks for being here. Yes, you can, assuming that it's not a Roth IRA. If it's a Roth IRA, it's stuck as a Roth IRA. If it's traditional funds pre-tax, then you can roll that into your um, 401k, no problem. Any other 401k for that matter. Solo 401k, another employer sponsored 401k plan. Obviously, you're asking about your solo. So, but yes, you can do that. And I would refer you back to my answer to Rob. In our client portal, instead of following the instructions of rolling money into your 401k from another 401k, you will follow the instructions that say, roll my 401k from an IRA. Okay, so it's a little bit of a different instruction, but almost the same steps, almost. But the steps are in there, and you'll provide them with the rollover request form and the letter of authorization and letter of instruction, and then they'll issue you a check, same as the 401k to 401k, made out to your solo 401k that you can mobile deposit into the checking account for your solo. And yeah, back to the Roth IRA. So if that rollover IRA, it's probably not, but if it is Roth, then the only option to self-direct that is a self-directed Roth IRA, which we provide. But obviously, if it's traditional, just go into your 401k here that you already have, your solo. No limits in either dollar amount or quantity of transfers. You can direct rollover as much or as little as you want, and there's no tax liability or tax implication, the word I was looking for. Either way, okay? You could do one transfer or one direct rollover this month, one next month, one the following month. I don't know why you would do that, but you could, and there's no limits in either case. Hopefully that answers your question, Siva. Yeah,
Brett, and
thanks.
that
Yeah, thank you so much. And I see your comment there. It is not Roth, so yes, you're welcome. My pleasure to answer the question and all the other questions. And yeah, Paul, we will definitely talk. And yeah, let's give it another second here. There's still multiple people on the call that might think of something. If any of you on this call are not clients of Sense Financial, or you just don't have a self-directed account at all, all right, Ken, thanks. We'll stand by. Then I encourage you to check out our website, SenseFinancial.com, like common sense, obviously, not dollars and cents, and just go through the different drop-down menus for the checkbook IRA and the solo 401k. Educate yourself. Obviously, that's what you're doing here already. But we're happy to talk to you. It's an educational type of consultation, not a hard sell. If it makes sense to do business together, great. If not, you'll walk away with information you didn't have before. I guarantee it. So, all right, let's address Carol's question. She was like reading my mind while I was talking. So, Carol, thank you. Basically, what we specialize in here at Sense Financial is helping people unlock, quote unquote, their retirement plan so that they can invest in alternative assets like real estate, like crypto, precious metals, private lending, private businesses. In fact, the IRS says you can invest your IRA or 401k into anything except for collectibles, wine collections, antiques, Pokemon cards, that sort of thing, and life insurance contracts in and S corporation stock, because you have to be a human to invest in an S corp. So that doesn't work either. An S corp can adopt a solo 401k plan, but that's not what I'm talking about. So that's what we specialize in, Carol. And we do that with two products, a self-directed IRA with checkbook control and a solo 401k for self-employed individuals, also with checkbook control. So again, check out our website. And if you want to schedule a call, you're welcome to. Leah provided the link there, SenseFinancial.com/consultation. Happy to talk through your situation if it makes sense.
Separate for rollovers, employee contribution, and profit sharing?
Well, Ken, you are the plan administrator. So the IRS says you must keep accurate books, accurate records, but they don't specify exactly how you do it or what tool you use. And so for me, I just keep a simple spreadsheet and I notate, I notated when I did my initial rollover. I notate when I do a contribution and then when I make an investment. And I don't make it real complicated. It's just line items on a spreadsheet with the date and the type of transaction. And I keep it pretty simple. So you should keep the accounts separate, right? So at Solera Bank, which is most likely who you bank with, you should have a separate account for the individual types of funds because they're treated differently from a tax perspective, right? Rollovers before you're 59 and a half, you can roll out of the 401k anytime. Contributions, you can't just arbitrarily roll the money out of an existing employer sponsored 401k plan whenever you want until you turn 59 and a half. So they're treated a little bit differently. So ideally you have separate accounts for each one. And we have an article on our client portal that discusses this in a little bit more detail. But here's the deal. Again, it's up to you, but you're responsible for it as the plan administrator. So you can keep track of all of this at the checking account level and or like the bookkeeping level, or you can do both. I prefer to do both because it's just cleaner. If I have 10,000 contribution and $10,000 in rollover, it's just easier for me to see two separate accounts where that initiated and originated rather. And then if I invest, that's fine. I can invest the money together. I just know at some point I have to kind of rebalance everything out, right? 50-50 in that situation. If it's 10 from this account, 10 from the other, then I rebalance it out once every 6 months or so with 50% going here and 50% going here. But again, I'm also keeping track of it on spreadsheets. Hopefully that makes sense. I try not to overthink this. It's just, you just want to have accurate books with the activity within the 401k plan. And this matters less if you don't take any distributions before you're 59 and a half, because at that point, most of the funds, except for maybe some Roth conversions, are going to be treated pretty much the same way, except Roth and traditional. Those are two different things as well, obviously. So go ahead, Leah. Excuse me. Harry, thank you for being a client of ours. No, not directly. Uh, IRS expects small businesses to have up years and down years and everything in between. A year or two is not a concern. At some point, you probably have to ask yourself, if you're not generating any revenue, are you actually self-employed? So that's going to come into play, at some point. But, the IRS is not clear on not making any money. They just are clear on you must have legitimate self-employment activity. Okay. There's no income requirement. But again, if I'm not making money, do I really have a business? And I think the answer is pretty obvious. So you judge that yourself, but you got to have at least the activity. Oh, good. Yeah, I think maybe did that come in a minute ago? Yeah, okay, maybe I was answering some of that already. The yes, you should track the rollover funds and you should keep track of what they're invested in. Yeah, absolutely. I would just I'd just do line items. This is just me personally. You choose how you want to do it, but I put the line items of the dollar amount and the type of investment, second trust deed, 123 Banana Street, $50,000, whatever it is. And then you could do another line item if it's 50K from your rollover and 50K from your contributions, two different line items, right? Could be the same asset though. And then, yeah, you'll want to eventually, like I said, you'll want to balance it out at some point back into those separate checking accounts. Should have separate checking accounts to keep easier track of it. And so yes, you can pull it together. I think I just asked that. Now let me expand on that a little bit. If you have two separate types of funds, like employee contribution and rollover funds, and this let me make it makes more sense with Roth versus traditional. Some people have Roth and traditional inside their solo 401k, but they want to buy. They have, let's say they have 25,000 in traditional and 25,000 in Roth, and they want to buy a $50,000 investment. Well, they don't have enough money in either one, right? But the solo 401k plan is the investor, right? There's only one plan, but there's different types of funds within the plan. So what you can do, and again, in our client portal, we have an article on this because we've been doing this a long time. So every question that comes up, we've created an article for pretty much. And there's what you could keyword search as operating account. And so what I mean by that is at Solera Bank, there's no limit to the amount of separate accounts you can open. So you have the main relationship with the bank is the solo 401k plan. And then underneath that, you can have multiple accounts, multiple checking accounts. You'll always have one, right? Because it has to be tied to one account. But then you can open up multiple underneath that. Could have rollover, one could be rollover, one could be contributions, one could be Roth, one could be traditional. You kind of choose how you want to do.
Like that is all of the questions that we have for today. I just wanted to let everyone know that this webinar will be available as a recording on our YouTube channel and webinars page on our website, and you should get an email about that in the next hour or so. So please look forward to that. And if you have any further questions, you can always book a complimentary consultation with Brad in the link that I've sent in the public chat. Thank you so much, everyone.